Marty, we've been debating it all morning long about Donald Trump's infrastructure plan, which seems to fly in the face of what conservatives have preached. He's going to double Hillary Clinton's infrastructure spend, which would be at least $500 billion that he would plan to spend just over 5 years. And he tried to explain how he would fund it, talking to Stuart Varney, that he would have an infrastructure fund that individuals would invest in, but that's still government borrowing, is it not? And how do you feel about that in terms of your conservative bent?
We don't need an infrastructure program to stimulate the economy. There may be a lot of infrastructure that would benefit from new spending, but if we do that, then we have to deal with the out-year deficits. So any plan that I would like, any plan that a conservative economist would like, would have to combine whatever spending we do in the short run with plans to slow the growth of entitlements so that the long-term debt isn't on the kind of wild rising path that the Congressional Budget Office is warning us about.
Look, you say the economy is doing okay, and we are growing, and yet the Bank of England this morning cut interest rates. First time that's happened since 2009.
It's not our economy.
I know, but we know that business leaders in the U.S. are not investing. They're not. We see that from the factory orders report. We see that from durable goods, and we know that we're looking at a horrible GDP story. So what gives? I mean,
so two things. If you think about the profits that companies are making, the profits are really looking very poor.
Down 2.5% year over year.
Yeah, that's right. And back to where they were in 2012. So you don't blame businesses for not investing in an environment where there's great uncertainty about the policies that we're going to have after the election, and where the profits are down. Capacity utilization hasn't gone up. So that's not too surprising. But to me, the key thing to look at is what's happening in the labor market. We'll get another number on Friday. But I think there's every reason to think we're going to continue to have pretty tight labor markets. The GDP number, I've been doing a lot of work on how the official GDP numbers are created, and you don't want to know. It's really, they don't know how to capture. It's too hard. They don't know how to capture what's happening to the quality of products. They don't know how to capture the benefits of new products. And so we're underestimating the growth of real GDP. That's not to say that it wouldn't be nicer to have official GDP growing at 3% rather than 1%.
Marty, you have a lot of experience in this field. And if I had told you 10 years ago that you'd have negative interest rates around the world or close to zero interest rates here in the U.S., you would definitely not have said, and the stock market will be at historical all-time highs. How do we balance that? Something has to give.
Yes, I agree with that. Something has to give. But the stock market is boosted by these very low interest rates. So we've got, in all asset classes, we've got investors reaching for yield. So whether it's the stock market, the price-earnings ratio for the S&P is now about 55% higher than its historic average, 55% higher. Commercial real estate cap rates are extremely low, and the bonds themselves are priced in a way that suggests we're going to keep these low interest rates forever. I don't believe that. So I think we're building up risks that could create some serious problems.
All right, we will leave it there. Marty, great to see you.
Good to see you.
Thank you so much for joining us. Martin Feldstein joining us there. Here's one headline from one of the analysts on the street. Bank of England unveils bazooka. Certainly moving the British pound right now.
Yeah, but is it blowing confetti and not the real stuff?
Yeah.
Like, how powerful is it?
Yeah. Well, it's definitely moving markets this morning, and stocks are up. As Marty just said, they love central bank action. Yeah. And you've got more of it this morning. Up next, it is the dawn of walking nachos, how Taco Bell is thinking outside the bun.